Hello, today we're gonna react to one of our fellows in the YouTube community. He is currently one
All
of
right, so
the best advisors, in my opinion, in the current market. Um, and let's see what he has to say about what's happening in the market. It is from, as you can see, Emmanuel Finance, and here's a like for the YouTube algorithm. I hope that you can do also the same thing for me, and let's dive into it.
have a ton of updates regarding a number of companies that we've invested in on this channel, ranging from Open Door, Tattooed Chef, HIMS, Big C. It's going to be a whole updates dump on you guys, all right? But before we dive into that, I want to share some knowledge that will help us get through this bear market.
This is what I like about this channel. Is
now, if you don't believe we're in a bear market,
he always share
it's probably
advices.
for two reasons. A, either your portfolio is heavily weighted towards Apple, Microsoft, Nvidia, or Google. If you've only got those in your portfolio, then you're probably thinking like, yo, Manuel, what are you talking about, bear market? Okay.
Yeah, this is why you should diversify your portfolio. Most likely, when you are building a portfolio, just for you to be in the safe side, get a little bit of the large companies, mega caps, and some small amount devoted for growth and potentially doubling your money. I'm gonna say for growth it's like 60%, and for large companies and large caps, companies are that are from S&P 500, do a 40%, and it's a recipe that will balance your portfolio for the most part. Remember, this is a non-financial advice, but this is with, like, if the market is doing well, you will do well. If the market is not doing that well, and you have only mega caps, they at least gonna be stable, and you will outperform the market if we are not in a bear market. And yeah, that will help a lot. Let's continue.
Okay, because you guys are sitting pretty, right? Or B, you might only be invested in ETFs that track the S&P 500 or the Nasdaq. But let me tell you this, right?
So this is one more thing. Like in my portfolio, I have index fund also. So why not? Why not, like, when you are building a growth portfolio, just to keep yourself at the non-riskier side, get some index funds. Like I usually like to invest in VOO, the Vanguard S&P 500 track. It has a low fee, and yeah, basically it is like it prints money every year. So why not? So if you lose on something, you gain at other, and either you outperform the market or you will be underperforming by a little bit. That in order for you not to be losing money in the stock market.
Right. We are in a bear market. Let me quickly show you this. So this is the Nasdaq currently, yeah, without the 5 biggest stocks. You see the blue line represents the Nasdaq as it is with all of the 5 stocks included, but the yellow line represents the Nasdaq if you omit the top 5 biggest positions. So really and truly, this is where the Nasdaq will be if you didn't have the 5 largest stocks pretty much.
Wow, this is like, I think this information is valuable, but also, like, if you look to bigger YouTubers like Meet Kevin, he is outperforming the market, and you can't say to that guy that this is a bear market. It may be for small caps, but if you are in mid caps and large caps, or mega caps, you are doing pretty well in this year. Not as much as the last year for the most part, but you are still like, the market for these caps are still moving toward like growth and insane income as a stream for you, for your money. I don't know, like the small caps, yeah, this year are hit hard, but yeah, now we have like discounted prices on everything. And in this month I spent like mostly about 65% of my cash on stocks, and I'm gonna keep doing so until I find that we are going back up again.
carrying the rest of the NASDAQ 100. It's insane. The NASDAQ would be down year to date minus 20%. Okay, so that tells you how overweight these indexes are. And these 5 stocks alone are pretty much covering over the cracks and the reality that we are actually in a bear market. So if you're not heavily invested in Apple, Microsoft, Google, then you are feeling pain right now. And this picture.
And like, I don't think these are only the performing stock in the market. Everyone knows SunPower, Enphase, Tesla. Like, there is a bunch of stocks that really outperform the market this year, like Etsy, a lot of stock, Affirm, a lot of stock that if you were investing in these stocks in the early months in the year, you are doing really good. So I don't know. It's not only about the companies that he mentioned, and I don't know what about the 5 biggest stock in Nasdaq. But this information is pretty interesting.
Is the best representation of that. The Nasdaq would be down minus 20%, and for me, that is a bear market. Okay, because it all started around June time, and it's just been trending downwards ever since. All right. So when you're hearing CNBC saying the Nasdaq's at all-time highs, the S&P 500 is at all-time highs, they are lying to you. Okay, they are lying to you. It's
Nice.
not the truth. This is the reality. All right. So, in my opinion, we're in a bear market.
I don't think they are lying.
Successful investors before us, how they were able to navigate a bear market, how they thought about a bear market, and ultimately how they succeeded. All right. So when the next bear market comes, which I believe we're in a bear market right now, and others are overwhelmed with fear, I want you to have the knowledge and fortitude to fear less. Okay. So the first step is don't be fearful. All right.
Okay.
This fearlessness in
who feels fear in the market? Most likely, if you are feeling fear, then you are paper handed out of the market. But for the most part, for us, the people that are building this for a long time, and like long investment, so I don't think there is a fear yet. The fear may come of Omicron really surges too many cases that fill our hospitals back. And I think if we got a recession next year, then we're gonna see like the fear. Because for the most part, the large caps are still doing and outperforming the S&P 500. And yeah, for the most part, there's not such a fear yet. But we are close. In the mid cap, it's in the small caps, there is a pain. The thing with the small caps, they are not doing that well, and they are at all-time low. So it's a great opportunity to buy, but is it fear? I don't agree on the fear thing.
In the face of uncertainty will bring you tremendous financial rewards. Okay.
Yeah, there is uncertainty.
While others live in terror of bear markets, you will discover in this chapter that they are the single greatest opportunity for building wealth in your lifetime. Why? Because that's when everything goes on sale. And let me actually quickly show you.
So yeah, he's right. Everything in the small market caps are on sale. Like, I've recently purchased Opendoor for 15 something, and I think it's crazy at this price.
A tweet, right? So this was at market open on Monday, and I tweeted, I received so many notifications in the last 8 minutes, I thought I was in trouble with my missus. Happy Monday in the markets, #stocks. And this is the series of notifications I got on my phone. So Square was at a 52-week low. Teladocs was at a 52-week low at $88.67. Insane. NEO was at a 52-week low at $30.39. Corsair was at a 52-week low at $20.50. DNMR was at a 52-week low. Melly was at a 52-week low. And to be honest, there was a lot more notifications, but this was just the maximum I could fit in the screenshot. So it was crazy.
Recently, I bought also Corsair, by the way.
I got so many notifications that so many companies were at 52-week lows. It was insane. And this is what the author of this book is talking about. The single greatest opportunities, because everything goes on sale. Okay, so apart from Apple, Microsoft, Nvidia, these companies are not on sale. But when you look underneath the hood, there's so many incredible companies right now that are on sale. So it goes on to say here, imagine longing to own a Ferrari and discovering that you can buy one for half price. Would you be downhearted? No way. And this is so true because if you think about it, the stock market is
the writer of this book is
the thing you want,
he got the thing,
on sale or gets cheaper, and then you get scared or you get downhearted or you get upset.
So the thing with stock that make people get scared is like you are not getting anything for cheaper, you are basically losing your money. This is our mentality, because at the end of the day, stock means that you own a piece of that company, and we all get in stocks in order to get them up and then get out of the company. We don't want to really own a company for forever. We own the company for a certain period of time, and after we think that it's enough for us, we get out. And that's why it's not the same as like you want to own something forever when you buy a Ferrari. But the writer of this book, I can tell you, he made the point.
Whereas in reality, you can actually buy more of what you want for cheaper, but that puts off investors for some reason, okay? Investors want to buy when the thing's getting more expensive, when it's going up. You want to buy more, which is completely the opposite way of thinking, but this is what it means. Yet, when the stock market goes on sales, most people react as if it's a disaster. Facts. You need to...
you have to really separate your emotions when stock is falling, because when you bought the stock, you know that it is cheap at this price and it will get like to the correct price at a certain period of time. The thing is, when the shorts are doing everything in they can, and when you like see that the company is not performing as expected, not meaning that they are not performing as well as they should, but the expectation maybe is high or something like that, you would like think that you were wrong and you will make a decision based on emotion and you would sell the stock. And that's what get you like really losing the money in stock. We all know that all the wealthiest people in the world invest in stock, and it is a printing machine for them to get wealthier. So why we lose money while other gain money is because we don't truly separate our emotions from the truth, which is stay at your gut and like don't sell unless the fundamentals of the company changed.
Understand that bear markets are here to serve you. Facts. I love that line. You need to understand that bear markets are here to serve you. If you keep your cool, they will actually accelerate your journey to financial freedom. If you find internal certainty, you will actually be excited when the market crashes, okay? So the moral of the story is this: don't be downhearted if you see your investments are in the red. If the companies are continuously performing, if the fundamentals and the financials of the businesses that you've invested in are improving and maybe improving fast, and the stock price is getting cheaper and cheaper, then that's an incredible opportunity that will bring tremendous financial reward in the long term. Okay, so take advantage of these deals. Keep a cool head, and if you want to be part of a Discord group that focuses on the bear markets,
I totally think he is right about getting things for cheaper in a bear market would lead you to financial freedom. But is at the bottom? This is what really concerns me. I know that December is usually not a good month since all the people would sell to get tax deductions for the most part, and January would recover fast. We don't know if we hit the bottom.
Are here to serve us. All right, so with that said, let's dive into the updates. Now the first update is regarding Open Door. Okay, so the director of one of the key directors of Open Door, this guy called Kefa, Peel, I hope I pronounced that correctly, but Kefir Peel, he actually took advantage of the share price going on sale. All right, so on December the 2nd, you can see that he picked up 137,533 shares. He acquired them at a price of $14.50.
Nice.
Insane. All right, that's the fact
Nice
that
surprise,
we have
though.
open door at these valuations right now is just absolutely insane. And when I saw this, naturally you get excited, you get happy, because it shows that the director believes that this company is crazily undervalued and is going to take advantage of it right now.
Yeah, because when someone buys into the stock from the company, that mean only one thing. He believes that the company is like going up as the stock price goes. Because if he is selling, he may get some stock for free and he want the money. It doesn't mean that he doesn't believe in the company. But if he buys into it, then he truly believe that this thing gonna double in money maybe.
Now, in fact, Peter Lynch has said many times that, insiders might sell their shares for any number of reasons, but they buy them for only one. Okay,
this is what I was talking
price
about.
will rise.
This is what I
Seeing
said.
one of the key directors picking up shares is a very comforting feeling, and he obviously has the belief that the share price will rise, maybe with Q4 earnings, maybe Q1, Q2. But he's a director that has inside information, and based on his information, he's essentially buying more stock. So that's really reassuring to see. Now, the next update is regarding Tattooed Chef, and we have a new analyst that started covering Tattooed Chef. So
Yeah, I heard this news for Tattoo Chef. There is a new analyst that he is saying that Tattoo Chef will outperform the market next year.
Update is essentially Cowen starts Tattooed Chef Inc. at outperform. Okay, so Cowen analyst Brian Holland initiates coverage on Tattooed Chef Inc. and the rating is for Tattooed Chef to outperform. So essentially in the earnings calls, we've pretty much only had Jefferies and Roth Capital. So we're going to have another analyst now that will be covering and probably be attending the earnings calls.
If you don't know about the analysts, each and every single stock has an analyst that covers it. For the major companies, it would be like something around 50 analysts. For some companies, maybe less. But for small companies that like are recent in IPO, they may have no analysts that cover them. After a while, it will get more interest in the market, so analysts would cover them. Analyst usually comes from banks, and they would suggest this stock to be bought from large funds and large institutions. So this is really good, because even if he is not saying anything good about TTCF, that means that Tattoo Chef will get more exposure to in the market, and maybe hedge funds will get into Tattoo Chef, and Wall Street money will flood into it, making it really get to the price that we really want as an investors and as a long-term investors.
To ask more questions, which is very good. So Wall Street are starting to pay attention to Tattoo Chef. So don't sleep on the chef, guys. It's still early doors, okay? So the next update is regarding HIMS, okay? So we have an article from one of the analysts at the Motley Fool, and they said 3 no-brainer stocks that I would buy right now without hesitation. And they went on to list a few of them. So the first one is Affirm. Now, I'm not too big on the buy now, pay later business model.
He doesn't like Affirm, but for the most part, Affirm was one of the good and performers of this year. Affirm is buy now, pay later business model. This business model may get hurt when people don't want to basically pay, but for the most part, they are like money printing machine that does everything automated. So why not? But I think the price evaluation at this point, even after the discount from 160 to 120, now around 110, it's still, there is a lot of hopium to this company baked into the price. Let's put it that way. And this is like only my opinion. For the most part, this is non-financial advice.
And the reason why I'm not that big on Affirm and that business model is because if you go back to 2008, right? If you go back to the financial crisis, most of these buy now, pay laters are for stuff like maybe if you want a new television, if you want a new freezer, if you want a new washing machine. Typically with these larger items, that's usually where you'll have a buy now, pay later, right? But remember, these are installments that you're paying. Now, if we are to enter a recession, which you've got a lot of analysts saying that, 2022 will have a recession because we printed so much more money in 2021, we're going to go into a recession, right? So if that is true, and we do enter into a recession, then look, people are going to prioritize their rents or their mortgages. People are going to prioritize their car payments. They're going to prioritize much more of their necessities as opposed to the payments for the fridge. And if that is the case, then you'll find a firm will struggle because a lot of people.
It's not like that only. A firm is now getting into everything. So they are getting into Amazon, Walmart, and bunch of there is no website nowadays that I can look into it that I don't see Affirm as one of the payment methods. And if you know that Affirm basically get their money from paying later as the transactions without any fees and there is no interest on the price, I think most of the people would really try to use Affirm. I really don't like this business model because it doesn't like my beliefs is you should pay for things and don't have basically a loan on your shoulder at the end of the day. But for the most part, it's everywhere and they are really getting huge at this business model.
People would default. I'm not too keen on Affirm, all right? So Monday.com was their second pick, which I'm not really that keen on, to be absolutely frank.
I totally agree. No Monday.com.
Okay. So one of the comments that they said here is that unlike other stocks on this list, HIMS and hers isn't only on a pullback, it's flat out.
Yeah, it is cheap.
I want to show you guys the stock price, but I'm sure you guys have already seen it.
The stock price, for the most part, it's gonna be a penny stock now if it got a little bit lower.
It's just been ugly, okay? But it's been fantastic for the long-term investor because we've been able to pick up more shares for even cheaper, okay? Shares trade at a PS ratio of just under 5, despite growing its revenue by 79% in its most recent quarter. It's just crazy. There's a huge disconnect between the fundamental and the financial performance of the business and the stock, okay? But that represents a great opportunity for...
Yeah, and for the most part, this is caused by HIMS and hers not delivering in the first quarters before they changed the way that they are working and started growing really well. People lost the belief in the company, but things will really build up from now on to HIMS and hers.
For us, okay? So if HIMS and hers can continue to post strong growth, investors may begin to trade the stock at a higher valuation as competition concerns go away, okay? So the stock's market cap of 1.2 billion leaves a lot of room for great returns if HIMS and hers can make its mark on the massive healthcare industry, and that's exactly what the company is doing. So that's the update regarding HIMS. The risk reward in this stock right now at its current valuation is just absolutely juicy.
Yeah.
And it represents a great opportunity for us to...
This is the thing that with the small market caps, when they become really as a good company that is providing growth and everything like that, and the price is too cheap. If the market struggles, the mid caps or the high hopium stocks would lose 10%, while this stock only lose 1 or 2, because the risk to reward will become mostly to the reward side, because this company or the other companies that are 52-week low, they are not going anywhere because they are basically posting revenue, so they won't get out of business. But at the end of the day, their stock is really cheap that basically cannot lose more money, if that makes sense.
Build our positions for even cheaper. Now, next up, we have Big C. So Jim Cramer had his Mad Money lightning round, and essentially people call up to ask Jim Cramer for his views regarding a certain stock. I don't know why people do this. The guy is just...
Yeah, I basically don't know anything about this stock, so I'm gonna skip this part.
It's a strange story about Big C. profit as called in the right. Although we did a net loss, you can the cost impacted our bottom. Well, it did. I'm talking about, of course, he has an impact low. Fantastic opportunity, okay? And it's the same story for the likes of HIMS, Tattooed Chef, Open Door, Airbnb, Opad.
Everything is in red.
Talk about on this channel. The performances have been going upwards and to the right. However, the stock has been going downwards and to the right, okay? And these are typical signatures of us being in a bear market. So going back to where we started, it's in these moments that you have to be fearless, all right? Know what you own and why you own it. These are one of the single greatest opportunities to build our wealth in the long term. Know what you own, why you own it, and keep following the business. Ignore the stock price. So I hope you gain a lot of value.
So I hope that you really gained value. I shared my thoughts. Go subscribe to him. He is a great guy. And basically he has like a large knowledge in this market. Don't forget to subscribe to my videos, and please, one like, smash the like button for the YouTube algorithm. It won't hurt anyone, and it's free, totally free. Please do so, and hope to see you in another video. Thank you so much.